Now we have everything ready, and we can start looking at some example trades, right? So if you remember, our entry conditions were very simple. I will write it down here. So entry conditions, first, price should be above 55 EMA, and second condition was RSI close above 65. So these two conditions are our entry conditions, and let me also write the exit conditions. There is only one exit condition, which is close below 34 EMA, right? So that's the criteria for this strategy, and I have this chart open. Why this chart? Because this is one of the stocks selected based on our shortlisting criteria. So we will cover the shortlisting part in a separate session, but in this video we will only go through the example trades to understand the strategy practically, right? How to execute it. And so now if you look at this chart, this green line is our 55 period EMA. The price should be above this. First condition. Second, RSI close above 65. So right away, when I look at this chart, I see here that this upper boundary, if you remember, this is 65, the below boundary is 35, right? So here, if I zoom in, I can see on this candle close, price RSI was 86.86, and previously it was below 65, 48.56. So you can see the current number here. Right now it's 58. So if I hover my mouse, I can see the value of RSI 48.56, and after this candle close, the price was, RSI was 86.86. That means it has closed above 65. So this was my entry signal. So what I'm going to do is, as soon as this happens, I will place my order at the open of next candle, whatever price I get, and my stop first preference would be the EMA at that point of time, 34 period EMA. So, but now when I do it, I see the size of this stop is 9.7%, which is very high. If you remember, I mentioned in the slides that stop should not be more than 5% of stock price, right? So there is another stop that we could use, and the other stop is the signal candle low. So this was the signal candle. Why is this a signal candle? Because this is the candle on which RSI closed above 65, right? So I will place my stop below this signal candle. So this low is 241.55. I could place my stop at 241.50. So let me do that. 46, 47, 48, 49, 50. So now my stop is 2.8%, which is well within our requirement of less than 5%. So this is now a proper setup. I take my entry here and I stay in this trade till we have the exit condition met. Exit condition is either my stop loss is hit or the price closes below 34 period EMA. So now if you see, this is the candle that closed below 34 period EMA. So this is where I'm going to exit, right? So this was my entry and this is my exit. And as you can see on this particular trade, we made 19.7 points and we risked almost 7 points. So this is roughly around 2.8 R. So basically, 3 times we made then compared to what we were risking on this particular trade. So 7 points we risked, almost 20 points we made, right? So this was, I would say, a good trade, right? Now let's see if we can find some more trades. So here you can see the price closed above 65, the RSI value is 66.48. So this is also a valid signal, and price is above 55 period EMA, which is our green line. So after this candle closed, I will take entry on the next candle open, and my stop will be 34 period EMA at that point of time. So this was my 34 period EMA roughly, and then we will be in this trade, and the exit will be either my stop is hit or the price closes below 34 period EMA. So this candle, as you can see, if I zoom in a bit, you can see this candle closed below 34 period orange line, and this is where we exit. So we took a small loss, and we are not going to risk more than 1% of our capital on these trades. So let's also talk about position sizing. So in this particular case, our stop was 7 points, right? So if you remember the equation, how we are going to calculate our position size, that is based on capital. Let's assume our capital is 100,000 and our risk percentage is 1%, which is 1 divided by 100, that gives you 0.01, and divided by the stop loss. Stop loss in this particular trade is 7 points, right? 7. So that gives me how much? This gives me 14.28, which is roughly 14, or you can even buy 15. So whatever works for you. So when you buy 14 or 15 stocks with this stop, and if this stop is hit, you are not going to lose more than 1% of your capital, which is 1000 in this particular case. 1000 rupees, right? It could be dollar depending on what stock you are trading, in which market you are trading, right? So that's how you calculate the position size. So in this particular case, the position will be 14 or 15 stocks. Let's also calculate the position size for this trade, so you will have more clarity on how to calculate the position sizing. And this position sizing logic is not specific to this particular trading strategy. This is something you should be doing and following with any strategy that you apply for trading. You should not be risking more than 1 to 2% on a single trade of your capital, right? So you should always calculate the right position size and trade accordingly. Okay, so now coming to this particular trade, in this our stop was 3.55. So let me calculate the same thing. Copy the same thing, because only thing that is going to change is this 7. Instead of 7, we will have 3.55. So basically you can see the previous stop was 7. This is like almost exactly half of it. So that would give you roughly double the quantity, almost like 28 stocks. But if I calculate exactly, then oh yeah, 28 only actually. So this is what we are going to trade. Our position size will be 28 stocks in this particular trade. So if our stop is hit, the worst case scenario, we are not going to lose more than $1,000 or 1,000 rupees, which is 1% of our capital. Your capital could be anything, and depending on that, you apply the same formula, replace this number with your actual capital, and the percentage risk will be same, the stop size will be same. Only thing that will change is your capital, and you will get your position size, right? So in this particular case, you would have lost I think somewhere around 300, because almost it's 1/3 of the stop size. What happened here, right? So not really a serious hit. Let's see if we can find any more trades. So if we scroll here, you can see the price closed above the range. Here the RSI value is 65.85, but this is not a valid setup. Why? Because the price is below 55 period EMA. That is the first condition, right? So this particular trade we are going to ignore. We are not going to take this trade. We'll wait for the next signal, and we got the next signal here. Here the RSI is 63.3, but on the next candle close we have 69.18. So this is a valid signal as per our strategy because the price is above 55 period. And what we are going to do, we are going to take an entry on the next candle open, and our stop will be, as long as it is less than 5%, it will be at the 34 period EMA, so which is here. Now in this case our stop got hit, so we took the full loss, right? And our position size in this particular case will be based on this stop, which is 9.29. so that would give us something around like 12 stocks or maybe 11 stocks you would have bought on this particular trade. So we took 3 trades so far, and one of which worked, one of which hit our stop fully, and one of which hit the stop partially, right? So we can go back and see if we can find more setups. So here, if I go back in history, I'm taking some random trades. So just to kind of, make you familiar with the strategy, how to pick the trades, right? So now here I can see this candle actually closed above 55 EMA, but RSI value was 64.41. The next signal we got at the signal we got at this candle, 65.75 is the RSI value, which is above 65. So we are going to take a position on the next candle open, and our stop will be at the EMA, 34 period EMA, which is almost 1.4%, well within our 5% requirement. So this is a good stop. And then we will wait for either our stop to be hit or the price to close below 34 period EMA. This is where the price closed below 34 period EMA, and this is where we exit. So here you might be thinking we could have got much higher profits, much bigger profit if we stayed in the trade or we exited somewhere here instead of exiting it here. But you have to think like this, that sometimes the trend can last for a long period of time, and you could have, in a good phase, you could capture a move from like here to here, right? And you won't be capture such large moves if you are going to book profits too early. So you have to be patient, and even in this case, you made at least 3 times of what you risked, because your risk was 3 points and you made almost 8.5 points, roughly 2.8 times, almost similar as this trade, right? So this is not bad. This is not at all bad. So if you will be patient, sometimes you will capture like 10-hour trades, 20-hour trades using this strategy. Okay, let's go back and see. Let's take one more trade, and then we can move on to the next session. Okay, here we see the price closed above RSI 65, but on this candle the price is below 55 EMA. So this is not really a valid setup for us. So this whole thing will go, we will wait for the RSI to come back below 65, and then here again we got a setup. After this candle, the RSI is closed, RSI closed at 80. So this is a valid setup, and we will take an entry here at the open, and our stop will be at the 34 period EMA, which is here, and that gives a stop of about 3.79%, 3.8% roughly, which is well within our 5% limit. So this is a valid setup, and then we will stay in this trade till either our stop is hit or the price closes below the EMA. So this was also a profitable trade, even though we did not really make much on it, but we did not lose money, and we at least we made something. And after this candle close below 34 EMA, we would have exited here, right? So now I think no more trades, because this signal was covered as part of this trade itself, so nothing new. Here again we can see one more signal here, and this is a valid signal because the price has closed above 55 EMA, and if we took this trade we would have lost money. You can see that. So this is where our stop would have been, and this candle would have taken out our SL, stop loss, right? On this trade we would have lost, we had taken a full loss of 1% of our capital, right? So that's how we execute this strategy. And if you will see in recent times, the time I'm recording this is like 24th March 2026, and right now conditions are heavily bearish, and most of the markets, global markets including India and US, they are kind of going down. So not many strategies are working right now, long strategies, but this strategy is still performing, and it's not that bad. I mean, if you'll just sum up all the points, you will find that this is still in green. But the point is, there are conditions when your trading setup has better chances to work. And if you remember, I mentioned the secret sauce. So if we apply that as well, if we just see what is the current market breadth, if it is favorable more than 50, below 80, then the chances of this setup working in our favor will be much higher. But the idea of this session was to make you familiar with the strategy and how to take entries and when to exit. So I hope this session gave you that clarity. If you have any question, you can always let me know in the comments, and I will answer with examples and charts.